But talking about earnings, let's address another set. Ramesh Gehaney, ED and CEO at Endurance Technologies, joins in the show right now. Ramesh, hi, morning. What would you attribute, or rather, would you attribute a large part of your Q1 weakness to India operations versus Europe? And if you could help us understand how exactly has demand been playing out for the previous 2 months with the unlocking kicking in?
Yes, good morning. Well, as we all know that, April was something like zero revenues for all. And then May 2020, we started, somewhere around mid of May, we started operations. There onwards, whatever you do was definitely better than what you had as a zero. But nevertheless, in June, we were just about at 50% of our revenues pre-COVID levels. And in July, we have touched to somewhere around 75%. Now, what is really happening is there was a pent-up demand, and everybody seemed to be coming back to back to work and get back to business. So things started moving upwards, and all the OEMs, I think they had cleared their stocks at the retail, and that's why the demand pushed up. So I would say things are looking positive ahead with probably a good winter crop and good monsoon coming already on its way. Things should be looking better here onwards.
Supply side issues still persist?
Can you repeat the question?
No, I was wondering if there are supply side issues which still persist, or have they eased out?
Yeah, supply side issues have eased out. In fact, most of the migrant laborers are back. That was an earlier concern in June and July, but most of them have come back. And tier 2 and tier 3 are also improving as far as the supplies are concerned. So I don't think there's much of a problem in getting material from our sub-suppliers. And even if there are any issues, we are supporting them in whatever way we can by interfacing for supporting them from our team of people who can, or our contract labor who can go over there and help them out in building up the numbers. I think the only challenge is that the way demand is picking up, the inventories which were drained out from the warehouses, building that back up to a good 7 to 10 days will be a bit of a challenge.
Okay, so that kind of gives us a sense of how you see the trend evolving as well. We've also seen, take us through the demand trend in Europe as well. And in the last 2 years, you received about 110 million euro worth of business for EVs, for hybrid cars from some of the bigger automakers. Do you expect to see that sustain now going forward? And, what are the sales from the EV side looking over the next 2-3 years?
We took an early start as far as EV business is concerned. And right now, also, you're right, we have acquired 110 million euro of business, out of which 80 million is for EVs. I see no reason why EV will not pick up fast in Europe, because that's where the concentration is. But the fact is, right now, approximately 1.5 million vehicles are in stock. Clearing them first, and out of that, only 5% are hybrid and EV. So clearing the stocks out first will be more important in EU. Although things look better over there, like June was definitely better than, if I look at standalone June, it was definitely better than an overall Q1, which was down by 57%. And June alone was close to 26%. So things are looking upwards, and I'm pretty confident that things will come back into shape, or rather say, everybody working towards the back of normalcy.
Okay. And at a time when, manufacturers are cutting spends, you've actually talked about raising your FY21 capex guidance to 200 crores. How much are you investing in your new unit? What are the plans when it comes to spending the funds as well? Talk us through that.
See, this year we'll be definitely a bit cautious on the capex spending, but still, you still can't ignore business, and all the new businesses that we've acquired and the expansion plans which we have for our Pantnagar plant are definitely in place, as our orders for brakes division is increasing quite a bit, and we need to increase on capacities. Not only increase on capacities, but we also need to extend the operations down at our Pantnagar plant where most of the combi brake systems and hydraulic brake systems are being supplied from Aurangabad.
Sure. If you could help us understand what exactly is going to be your margin trajectory that you think or hope to close the fiscal year with, and will cost reduction efforts continue at your end for the remaining quarter of this fiscal as well? And can you really garner benefits on the back of that?
Well, that's a very good question. See, the pandemic, the COVID has given us enough lessons. Although Endurance has always been a very profit-oriented company, a profit-focused company, we always believe that a profitable growth will only sustain positions in the coming years. But this time also, we have taken a very early start as far as the austerity measures were concerned. We took a lot of efforts were done during the lockdown periods to reduce cost and to identify every single cost that we were holding on to, how to reduce it. So going forward, I would not like to give any guidance on what will be the margins throughout the year, because after the peak period, how the industry plays out, it's still anybody's guess right now. But being positive, yes, if the industry moves on like this and the recovery happens, then we should all be looking at a positive end result for the year. Although we all have been in a very bad Q1 of this year.
Okay, great to then have you on the show and helping us understand what exactly happened in the quarter gone by and what's likely to pan out going forward as well, Ramesh. Thanks as always for taking the time out.